Hi everyone, welcome back to Be Rich. There's a famous saying from Mike Tyson. Everyone has a plan until they get punched in the face. I didn't say that, Mike Tyson said it. So anyway, so it feels like that when it comes to what's happening in the global bond market. And I thought today we'll dive into this as a part 2 to the video of yesterday. Continuing to see the ripples effect of what's happening with the big beautiful bill or the big gamble, as I was saying. Rolling forward, what's happening in Europe is very interesting as an investor in corporate equity and in bonds. So let's dive into this and then look into it and understand it. Of course, like I said, there's a lot of amendments that has happened in Senate to this bill, and finally it's pushed through the Senate, and now it's gone back to the House. The House has to pass it again, then it has to go back to Trump, and Trump has to sign it. So there are lots more to watch. But somehow Trump seems to be getting his way. He seems to be bullying everyone into submission, and it's working so far. So we'll have to see. But as things stand right now, the game plan seems to be for Trump is to cut taxes, to raise tariffs, then to hope the debt will take care of itself. As far as the debt is concerned, he says it'll take care of itself. And that is where it's all getting rather sticky, and we're about to get punched in the face from the bond market, because global investors seem to be having none of it, and their money seems to be moving slowly elsewhere. And that is what I've been seeing in the articles I've been reading, and also in the informations I've been perusing. So if you see this, if you look at it, where all the fun seems to be happening now, it seems to be in the European junk, seems to be where all the fun is, where the party is happening. The hottest ticket in town is in the European junk bond market. And what was first happening was Trump was commanding, and the world must obey, seemed to be the game plan since the beginning of the year, since he took over. And he's been pushing this big beautiful bill, like I said, and everyone had to get on board or get out of the way. But like I said, $2.4 trillion of US debt being added on is not a joke. And who's willing to take on his debt remains the question. He has been hoping that investors, global investors, would be lining up and queuing up to take it on. Don't mistake me. One of the biggest consumers of American debt are the Americans themselves. There are enough Americans buying American debt, but when we talk about the entire debt, American debt, the global market also consumes a considerable portion of it. And all it takes is a small crack in that to have a ripple-on effect to spread, as they say, the contagion, right? So if you see where this pressure has been yielding, is the long-term yield of American bonds that has been steadily climbing, and it's been hovering there, and it's refusing to come down, right? Even rating agencies such as the Moody's, the S&P, Finch are having none of it. They're also considering these rates, what they're giving is too high, considering the amount of risk which these securities are holding. So this is where the punch comes in. The US deficit, right, is at almost 6% of GDP, which is almost double the long-term average where it's been at. And Trump hoping the tariffs will generate enough revenue to plug this hole seems to be a little short-sighted, because tariffs, what they'll tend to do is they'll tend to shrink their tax base. How do they shrink the tax base? As you slap on more import tax, you reduce how much actually comes in, or at least legally comes in. This has happened in India in the past. India has been a classic case of this. They'll suddenly put duty on the border, and suddenly you'll find overnight flights to Singapore, flights to Dubai being packed with people carrying in stuff. As we colloquially call them here in Tamil Nadu, kurvis will suddenly come rushing out to go grab. Burma Bazaar will be back in business. So this, I don't know, his tax base is going to shrink. So meanwhile, what will happen is amount of goods coming in legally shrinks. This will push up inflation. The Fed saying, I will have none of it, and they're holding the inflation rate. Like I said yesterday, he said, Powell said, if it wasn't for this tariffs, I would be cutting right now. But that's not going to be happening. And the government of United States needs to issue more debt to cover these shortfalls and gap. So there's more supply, there's less global demand, What does that mean? Your borrowing cost starts going up. Why? Because investors need to be attracted to you offering the the interest to your loan. If that doesn't look enticing enough, they will not be looking at you because they feel there's too much risk baked into this whole plan of his. So the cost of this is going to push American mortgages up. It'll push business loans up, and just the interest portion of this bill, itself is going to be like putting on a $150,000 mortgage on every single American. So these are just calculations, right? None of this has come to fruition. It's all in the process. And everyone seems to be looking at the numbers. This is what I'm saying in the last video when it's ending. I said the math wasn't adding up. And this is basically the math everyone's screaming and hollering about. And all the articles online and offline are going on hammering this. Because now there's the real pushback coming. The pushback is investors are saying, you know what, we're seeing too much risk here. Let's not sit in these US bonds. Let's look elsewhere. Believe it or not, where they're going, let me do that bit again. So believe it or not, where they seem to be going towards is European junk bond market. And that's where the party is at right now. In June alone, 23 billion euros in high yield European debt was issued. And that's a record. 44 deals was made. That's another record. Borrowing cost for risky companies have dropped fast. High yield spreads have fallen from over 4% to just about 3%. Companies that could not borrow easily before are now finding people lining up to give them money. Companies like Flora, which is a butter brand in Europe, they are able to find financing. Czechoslovak, which is a group that makes ammo maker, they're finding it much easier to get debt now, right? Even Carnival Cruise, which used to be borrowing at double digits, now are refinancing their debt at 4%. So imagine that you are borrowing at 11%, 12%, right? Now you're able to borrow at 4%. Imagine that. So this is what's happening. And why is this happening? Because Trump has made the American bond market unpredictable. And big money wants yields, yes, they do love yields, but at the same time, they don't like policy whiplash. The uncertainty which he's creating is creating this movement. So money is being diverted and diversified into Europe's risky corporate debt. And strangely, the riskier you are, the cheaper your loans are becoming. So two signs are emerging from this whole mess. Weak European corporates, it's a golden window for them. They're able to borrow cheap. US investors are hedging against the American risk and they're moving out. The dollar itself have had the weakest start to a year in the last 50 years. If you have to go back half a century to get the American dollar to have such a weak start to a year. Right now, if you look at the dollar index, it is sitting at 96, 97. It even briefly went below 96. Today, as I'm recording, dollar index stands at 96.445. So these are really strange times because what does it mean for value investors? Remember, you cannot borrow and spend forever. That strategy never works. For you and me as an individual, if I say this, you'll say, no, it doesn't work. So for a country also, it won't work. Though you may have the reserve currency, there's only so much of abuse you can do to it. Second, mortgages in the US, business loans in the US are slowly creeping. They're starting to feel the heat. That is going to have a lot of ripple-on effect. You've seen huge layoffs thanks to AI. Now you're going to see huge layoffs probably due to other reasons too. Be careful even if you're jumping on board to this European junk bond market, right? Because everyone seems to be thinking that's where the party is. Because what is happening is this is starting to dilute risk into safer assets. What was considered very safe once, now risky assets are also looking to be at the same par at this. So you can imagine how muddy the water has become. So what you must question is the yield worth the risk? That is very, very important to ask yourself at this point of time if you're looking at bond, especially even short-term bonds. If you're looking at corporate bonds for the short term, just don't look at the yield. See the risk and is it worth taking on this risk. It's important to stay diversified, I agree. But understand debt cycles and how debt cycles work. Stay patient. Don't be impatient. A lot of you are very impatient when you're asking me, what should I do? What should I do? Learn to be patient. If you're a value investor, it is very important. Wealth creation only happens in the long term. You cannot create fast, quick wealth. A lot of you in the younger generation seem to believe this, seems to be fixated on this. You'll only destroy your wealth in the short term. Of course, there will always be a few winners. In every single casino, there will be a winner. But remember, the house always wins overall. This is true in the stock market in the short term. If you want to stay, you have to be willing to invest and build wealth in the long term. And of course, like I said, don't go chasing yields blindly. Anyway, that is the follow-up video which I had to yesterday. A lot of you had some interesting questions and comments to yesterday's video, which I'll quickly dive in now and answer. Those of you who would like to leave, this is the point the video, what I want to talk about ends. These are the questions and answers which are going to follow now. First, Vignesh Kumar 163. I think gold investment will save India. Yes, gold has always been a good safety net for India. In the past, we have managed to save ourselves from, a lot of embarrassment when it came to our finances globally by even pledging our gold. And yes, gold has always been a great, savior for India. I'm not denying that. But country needs to have a balanced economy, productive businesses, good governance, and innovation too. Gold, yes, can hold and protect, wealth, but it cannot generate wealth. So remember that, Vignesh, even in a personal level. Rivanesh Kumar 3618. Better invest only in gold, God's currency. I know, especially when it looks with all this news which I'm saying and all this noise which is there, like which I'm generating is noise right now. It is very hard to cut through that noise and understand what is the signal and what is the noise. And as a value investor, this is a skill which I want you to learn. I want you to learn to see what is signal and what is noise. Not to become fearful, dump everything and run to gold. That is not investing. That is just being scared. So, Rivnesh, don't be like that. Take time, study, learn, understand, and remember, stay in your circle of competences like Warren Buffett has always said. Investigate the companies which you are using, the brands you are using. Study their balance sheets. Are they doing good business? Are things good? Don't get swayed by macroeconomic news. Don't get swayed by what Trump is doing or not doing. All that is irrelevant. Focus on the companies which are near you, which you understand, businesses you understand. And by that, investing in businesses like that, I'm sure you'll be able to create wealth and you don't need to be fearful and keep holding a lot of gold. Vinod Narayanan, U1H. Is it good to do SIP in NSE stocks and CDSL stock? Okay, NSC. Okay, you mean NSE, National Stock. Yeah, I'm not doing on both. So I'm not buying. I think NSE is only available in the great market. They're not listed as yet. I'm not sure if I'm right or wrong on that. But stock exchanges I don't usually invest in, and I don't usually invest in CDSL, these kinds of deposit-free companies also I don't invest in. So do check your valuations. Make sure you're not paying too much for it. Infinity 546. Indian overseas banks is only a PSU. That is in good range to buy. What is your plans? I don't usually look at government-run banks and government financial institutions. Like I've said many times, government has another agenda and not business agenda. A government's agenda is to take care of the country and worry about the country as their first priority. Making profit and taking care of investors is second priority. So if you're investing in any government-run organization, remember that you don't have a seat on the table as an investor. So that is the reason why I avoid government and government-related stocks. Venkatesh Vinod 8046. Can we anticipate gold to rise instead of stock a while? I can't predict these things. I'm not an astrologer, Venkatesh. But what I can tell you is, in the short term, things are unpredictable. True. But if you look at 10, 15 years, if you invest in a right company, a good company at the right price, you will definitely beat gold in 10, 15 years. This is a proven track record. If you look at history, you can take any stock of good quality, look at the price where it was, where it is today, and look at gold where it was and where it is today. Even the index, if you take the simple Nifty 50 index, you take it and compare it over a period of 10, 15 years, it beats gold. So keep that in mind. Chandraya Babu. Sir, I'm following Anand sir for the past 5 years, and all of you like Trader, Vinod, Sheikh, particularly you, Kesav, Arun, our upcoming talent, Sashi, Albin, Dana also. There's no word in my team's conversations. Well, I'm very thankful, man. And I deeply appreciate your words, Chandraya. And it means a lot to me and my entire team, especially my brother. Thanks for the love and support. And reviewing your portfolio, yes, if there's any way you're in Chennai and we catch up, surely I don't mind looking at your portfolio. But if as long as you're investing based on principles of value investing, you're in good hands. Don't worry. Juarez loves everyone. Hey man, you keep commenting every day. Thanks for the support and affection. Juarez, it does mean a lot to me. But this time you've actually asked a question saying, I was just thinking the same about investing in short-term bonds instead of equities. Yeah, so that's what even Warren Buffett is doing. Looking at short-term yields and short-term bonds, 3 months, less. And he's taking cash right now because Fed is keeping the interest rate where it is. And like I said, though today's video is all about the bond market, the European junk bond, and investors feeling like this about the US. End of the day, remember, the American dollar is still the reserve currency. We don't have a replacement for any reserve currency. Yes, we can talk about many things, but there is nothing because that's how deep-rooted the dollar is to global trade and the global economy. You just cannot remove it and put something else inside it. But it does create short-term pain, which is what the Americans will feel. And, we as investors will also feel if we're not careful in where we put our money. So being cautious is what is you should keep in mind and not have fear. Darks1590, discuss ACGGX. Okay, I'll talk about that in another upcoming session. Darks, your thing will be added to my list. Siddharth27 is saying, how about Supreme Industries Cosmo first? You have discussed earlier, but the price point you considered, yeah, I did discuss them before, but now I'm focusing on global stocks and global companies. But maybe on Instagram, you can catch me up over there, Siddharth, and I'll talk about it there. Tara5564, what's your thought on rare earth minerals stock? Rare earth minerals are very important, especially what is happening with China and US in trade, and even in India, where our EV industry is struggling because of access to rare earth. So, but I would say usually these kinds of businesses are highly cyclical. They're sensitive to geopolitical problems, like what's happening right now. A lot of them carry a lot of debt, so be careful. Make sure you really understand the business. Just don't follow, the news. You're seeing the news, there is tariff, there's a great demand for rare earth magnets, so maybe I should look at it. That's a great starting point, but now you have to do the hard work. Choose the companies, deep dive into them, look at their balance sheets, see the promoters, see how they're securing contracts, how are they supplying it. So study all that and understand, then you can get into investing. Just seeing a news and thinking instinctively, okay, this is going to be a good place to be in, it's not investing, it's gambling. Prabhakaran6508, thank you for the info provided through the videos. How do you analyze bonds? Is it bad to pile on to a single bond? Is there a concentration risk in bonds too? Yes, of course. There's a concentration risk in everything in life. If all your assets are inside your house, that is a concentration risk. If all your gold is in one bank locker, sitting in one bank, in one city, in one street, it's a concentration risk. There's no doubt. But you have to do risk assessment, right? Risk assessment is based on understanding knowledge and mitigating that risk. So same way, I'm sure you mitigate risk with all your assets in your house and all your gold being in the same locker in the same bank for years. I'm sure you need to also mitigate your risk in bond. So diversifying in bond is not a bad thing. At the same time, don't diversify for the sake of diversifying. When you're diversifying in bond market, make sure you move into assets which are equally in risk. This is why the video I was talking about today. Investors in the US are saying it is very risky there, it is whiplash policy from Trump, and everything is true. Yes. So what are they doing? They're taking their money and putting it into European risky corporates, and those corporates are already risky. Last year they were doing terrible business. They were running up losses. They are finding it hard to, like Carnival Cruise, their debt were in double digits. Now their debts have dropped down to 4%. So that is crazy liquidation of risk. Is it the business fundamentally changed? No. Have they doing more business? No. So, but investors do not know what to do, so they are taking their money and they're moving it around like this. So be careful about what you decide to do. Viplin Air 5491. It is great if you can explain what is inside this bill and how. Okay, let the bill actually get signed by Trump. Let it get through the House, because I already made a mistake on Instagram today morning. That remittance tax from 5% has dropped down to 1%, right? So I read a Business Standard article which had poor information sourced in it, and I went to Instagram and I said this, which led to confusion. And thankfully, the people on Instagram, our fellow tribe members, pointed it out saying, hey, we know the information is dated. So then I checked, I was right, and I admitted to my mistake, and I corrected myself. Same way, let's wait till everything is done and let Trump finally sign this bill. And once I have the bill in hand and all of us have it, we'll read it and assess it and understand it. And definitely I'll do a follow-up video on what it means. Mukesh, meanwhile, question for tomorrow. Paytm has brokerage Paytm money, which is profitable. Well, catch me on Instagram. I'll talk about Paytm there. I don't want to talk about Paytm here. So annoying when Biden printed more money than Trump. All of you clapped like idiots. When Trump said less than half, people are annoyed. Hey, I'm very neutral. I had issues with Biden. I had even issues with Obama. I have issues with Trump. I have issues with everybody. At the same time, there are things about Obama, Biden, and Trump which I like. I am only purely talking about this as a finance channel, as an investor, where we can put our capital and create wealth in the long term. I'm apolitical. I'm not a Republican. I'm not a Democrat. I'm not a BJP. I'm not a congressman. I'm just a human being on this planet trying to make sure I can create enough wealth to manage my life for the 50, 60 odd years I'm here, and make sure that I leave a little bit something for my kids when I'm gone. That's about it. And that should be most motivation for most people who are watching this channel. I'm not here to debate politics or saying if this is right or that is right. That is something purely up to you. On a personal level, you can decide. I'm not an expert in that subject matter either. So I'm sorry that you felt very annoyed. I'm not putting Trump down. I'm not putting Republicans down. I'm just wondering, how does this math work? I'm just asking for an explanation. And you can see it happening in the bond market. They don't seem to be agreeing with his maths, to the point they're taking money out of something like the reserve currency, which is the US dollar, and willing to flush it down in European junk bond corporate market. So, I don't know. Go figure is all I'm saying. Anyway, thanks for watching the video. That pretty much covers all the questions, I think. Wait. Munir has asked about US health insurance companies. Yes, I will talk about United Health and Anthem soon, because it's so interesting what's happening with the bond market. That's why I had to catch up on this. Otherwise, I was planning to talk about a company today. And Wall Street Newbie says, thanks for mentioning the Buffett strategy. What do you think about GSK? I'll talk about GSK too. Other than that, my number one fan, Chitranjan Ramanan, thanks for always showing me appreciation and love and affection. And to all of you who show appreciation to us and my team. Thank you so much. Anyway, I think I've stretched the video longer than it's necessary. Sadhu's behind the camera shaking his head saying, cut it, cut it, cut it. So I shall cut it here. So Rupesh is back from his sojourn from marriage. So we're all happy that Rupesh is back. So those of you who would like to wish Rupesh again can wish Rupesh on a happy married life. And those of you who are married like me and Sadhu here can wish him give him some wisdom about marriage also. Because Rupesh does read the comments, believe it or not, more than I do. Thanks for watching the video as always. Have a wonderful day, which part of the world you are in. If you're in India, have a great evening. See you tomorrow with another one. Bye.